And we are live. Good afternoon, good morning, good evening, wherever you are in the world. Welcome to Codementor Office Hours. My name is Mark, and we're really excited today to have quite a different session than we normally have. If any of you have joined us before, whether you're in the room or you're watching in the other the asynchronous broadcast room, we normally do pretty technical sessions, but today we're really going to talk about what a lot of us are building technology for, which is to launch our own projects or our own companies. And we are so happy to have Ari Newman of Techstars here with us today. So I'll give Techstars and Ari a brief introduction. We'll kick it over to him to talk a little bit about what he does, and then we really want this to be a session answering your guys' questions. So feel free to use the group chat, or if you're in the other room, use the Q&A app, and I'll sort of be moderating both, and we'll try to hit as many as we can. I've also gotten some questions emailed in. But without further ado, Techstars, if you're not familiar, it's a mentorship-driven seed stage investment program. They run a 3-month-long program in Austin, Boston, Boulder, San Antonio, Chicago, New York, Seattle, London. They're everywhere. They do one in each city every year, and they additionally run several powered by Techstars programs with some of the biggest brands in the world. Techstars is highly selective. Hundreds of companies apply, and only about 10 are taken in each city. Selected companies get $18,000 in seed funding. In addition, companies accepted into the program are offered a $100,000 convertible debt note by a group of prominent VCs immediately upon acceptance into Techstars. Ari Newman is a partner at Techstars Ventures, which is Techstars' seed and Series A venture fund. Ari is also an alumni of Techstars from 2007, and he's a longtime entrepreneur. It's worth Googling his bio to learn more. But without further ado, I'd like to introduce Ari. Everyone can quietly muted welcome him. Yeah, Ari, maybe you could tell us a bit more about sort of the current work you're doing and a bit more about Techstars.
Sure. Hi, everyone. Great to be here today. And yeah, as Mark said, I'm a partner at Techstars Ventures, and prior to focusing on the venture fund, I was also the network catalyst at Techstars for 2 years, helping build and scale the overall Techstars network. And I was an alum in the very first Techstars program in Boulder in 2007. So it's been a privilege to be around the ecosystem and to see Techstars grow from an idea into a global organization and global entrepreneurial network. And so my work really is focused around working with companies and investing in companies. I mentor and do office hours at a lot of our programs, visit cities all over the world, checking out our programs and helping the entrepreneurs there. And then our venture fund operates similar to other venture funds, where we selectively invest in companies that fit our fund profile or resonate with us. And we do both seed and Series A investments. The investments are either Techstars alumni companies, founders of previous Techstars companies, or mentors that are already involved in our ecosystem. And that's typically kind of the breadth of the fund focus. So, I personally have worked in both B2B and B2C companies. I've started 3 different businesses over the last decade or so. And I just love working with other entrepreneurs and being involved in the early days. Guy Kawasaki had this book called The Art of the Start, and there's something magical to me about the early formative cycles that tech companies go through in terms of figuring things out and laying foundations so that you can create a great business. And so that's what I love to do.
Awesome. Well, I think a great place to start while people are sending in their sort of personal questions is, from a really high level, what are your criteria, or maybe on behalf of Techstars' criteria in picking a great early stage startup?
First and foremost, it's the team. And it's easy to say, oh, team, everyone has an awesome team. It's easy to say, oh, yeah, I've got 2 rockstar developers or this or that. It's about the team really making sense for the market opportunity or the business they're going after. Having not only a background and a skill set that makes sense, but a team that can prove that they can work together and execute quickly. If you've got a great team that is receptive to feedback, that has a lot of big ideas, it really goes a long way. The Techstars program is 3 months. It's a mentor-led accelerator, which means you get a lot of input and a lot of filtering, and a lot of the issues or problems that you may not see yet in your business get highlighted for you, and we help you work through them quickly. So a team that can respond to change quickly, can take input, and has the breadth of skill set to actually implement decisions are the ones that benefit the most from the program. So we look for teams that we feel are going to benefit the most, but also are thinking big and are playing in big markets.
And oftentimes you have so many sort of solo entrepreneurs that have this really big idea, but it sounds like what you're saying is that's rarely enough, without the team to support it.
Yeah, I mean, it's not to say that solo entrepreneurs cannot get in, but I think there's almost like a symbiotic relationship that you want to facilitate, where if you are a solo entrepreneur and you've got this amazing disruptive idea in a really big market, but if you're by yourself, you probably can't execute on all the input and feedback and ideas and do the market research, the product market fit, the customer discovery, and write the code and work on design. There's too much to do, and there's too much input coming in for a sole person to manage all of it. So you've got to have people that you can really trust, that you can rely on, that can move mountains just like you.
Gotcha. And how, on the same note, I mean, how important is it for a team applying to be experienced doing work together already, as opposed to someone applying and saying, we're checking all the boxes of what would make a good team if we get to work on something together?
I mean, I personally don't think that's super important. I think the key is, can you work together? I mean, my own experience in Techstars in 2007 was a great example. I met my co-founder while I was starting the discovery process for for this business Filterbox, and my co-founder Tom, he and I had never worked together. David Cohen introduced us, just happenstance. But in 4 to 6 weeks, we had spent a ton of time together and had proved that we could work together and trusted each other. And we had built a functional prototype and an architecture and put an entire business model together in a couple of weeks. So by the time we applied, we already had demonstrable progress that said, hey, give us a chance and we can work together.
Gotcha. And so, what type of, can you give some examples of the kind of mentorship that a startup might receive by getting into a program like you guys? Because it's obviously, it's not just about the money. There's a lot of places you can go for fundraising these days. What's the core benefit of the kind of mentorship they receive?
Yep. And actually, I'll just riff on that one comment you made about places to find money.
Mm-hmm.
I think in general, like, my advice to entrepreneurs is, if you're just looking for the easy 100K, don't go through an accelerator. There are much better places to find money. The value of the accelerator is being part of the Techstars network, first and foremost, and the mentorship and the relationships that you'll build for life. It's like joining a worldwide network that you're part of forever, and there's tons of value there. What happens when you're in program in terms of mentorship is you have both what I would describe as strategic mentors as well as functional mentors. And so a strategic or lead mentor is an experienced entrepreneur, business executive, someone likely with domain expertise or relevant experience to the area that you're working in, who can help you think about strategy, help you think about fundraising, help you think about go-to-market or pricing or high-level aspects of the value prop of the business. And then there's functional mentors, people that might be experts at growth hacking, architecture, marketing, messaging, pricing models, things that are sort of more detail-oriented, where someone with really deep operating knowledge can be helpful. We bring those types of folks in as functional mentors to really help you take the best practices of the industry and lots of lessons learned and apply that. So, a lot of the reason that a lot of mentors show up and want to help and offer to, give their time and be helpful is they understand how expensive it can be to make mistakes in the market. So, you raise a seed round, you spend 6 months with the wrong go-to-market or the wrong pricing model, you may not get a second chance. And so, you talk to a lot of mentors, they'll all say, I just want to help other entrepreneurs avoid some of the mistakes I made in my career. And so that's really where it comes down to is, You get a lot of input and a lot of insight from people that have been there and done that can help you think through pitfalls that you may not see. Or, in many cases, one of the traits of a great entrepreneur is being optimistic. One of the realities of being in business is that things are not always what they seem. And so that duality is important, and we help you work through that.
Yeah, well, I mean, what type of transformations have you seen from a company coming in and coming out either a completely different focus or treating their work differently? I imagine that happens frequently.
Yeah, there's no formula that says 40% of the companies pivot or this happens to some percentage. It varies wildly, but there, in the last Boulder class, there's a company that started and got into the program because they were a great team that could move quickly and they were doing interesting things. But ultimately, what they realized over the course of the program was they weren't solving a big enough problem for a big enough market. And not only did they pivot, they're executing a completely different business idea. It had absolutely nothing to do with what they were doing before. And so I wouldn't even call it a pivot. They took all of the goodness that they had built in terms of operational prowess and some of the seed capital they raised and their experience working as a team together at a high velocity and applied that to an entirely new market.
Gotcha.
So it varies. You see people change their pricing model, their go-to-market strategy, their messaging. I think it really depends on how close to on the mark the business is from the get-go.
Right. So we did title this session "How to Get into Techstars." So maybe we'll pivot the conversation a little bit towards what are obviously you want people to come across as authentic and represent themselves well, but what tips have you given or strategies have you seen work well from teams trying to just represent what they're doing and make sure that they get your guys' attention, since you guys have so many applications coming in?
Yep, absolutely. So if you think about the application process, any given program could have 1,000 applications and 10 companies get it. And so when you're thinking about the F-Success application itself, it's finite in terms of how much information you can provide. The idea is to be as concise and clear as possible as to why it's the right team solving a big problem in a big market, and that sufficient thought has gone into the approach. The other big thing is demonstrable traction or demonstrable execution as a team. So if you can identify what you've accomplished in the last 90 days or 6 months, or what your growth rates are, or what kind of progress you've made, even if you're pre-product or pre-launch, helping the people reading the applications understand the execution pace that the team is on is really helpful. So it's the magic formula is a team with the right skill set and background, demonstration that you can really execute and get things done, and that you're thinking big and thinking strategically about solving hard problems.
Gotcha. And I mean, in terms of your guys' review process, are you for all the people that catch your attention, you're checking out the products if they have a beta out, you're talking to some existing customers, I assume?
Yep. So every managing director who runs the various programs runs their filtering a little bit differently, but we absolutely look at the videos, we look at the products, we get hands-on whenever we can, we look for existing customers. It depends on how far along the company is. But there is a lot of diligence that goes into the process, and once you get to the point where we're kind of digging in hard, there's lots of FaceTime or video chat and interactive time as well spent.
Gotcha. So yeah, Christian just sent a question in, and this is a super popular one. We were also emailed in questions like this. So what about if someone is doing all of those things you just mentioned, but they can't find a co-founder? Should they wait until they find their co-founder and build their team to apply?
I don't think there's a black and white. It's a great question. I don't think there's a black and white answer. I would say if you're actively looking for a co-founder and you think you're close to finding one, then yes, wait. If the business is at the point where it's ready for an accelerator, and you're a sole founder, and getting into the accelerator or some extra traction might help attract the co-founder, absolutely apply. The other thing is the benefit of applying is that you're on our radar, and even if you don't get in for that current class, we then have some knowledge of you, and we're paying attention, and we know who you are. So if you apply as a sole founder to the current group of programs that are coming up for the summer, and you don't make it through the selection process, but then you reapply for the fall with a co-founder, we understand exactly what's going on, and you're already a known entity.
Awesome. So someone emailed in this question, which I thought was interesting. So they felt like Techstars and other similar, accelerators really focus on high virality companies. And what about people that are interested in building sort of these slower to scale businesses, but have a longer timeline? Is that still something that an incubator can be relevant for?
Yeah, absolutely. And I think, to be honest, I can't speak for any other accelerator. I can only speak to Techstars, but I think that's a little bit of a myth. We're not just looking for companies, that are going to go viral or consumer social apps. We're not in the unicorn hunting business. We invest in great entrepreneurs. We invest in great entrepreneurs with big disruptive ideas playing in big markets. A lot of great businesses take a decade to really get real, to become serious, ongoing concerns. We're not only investing in or looking for things that seem like obvious quick flips. That's not at all. B2B companies, SaaS companies, a lot of the business models today take a lot of time for that flywheel to fully get up to speed. And our job at the accelerator is to help you avoid as many landmines as possible and accelerate that speed of the flywheel and get to the place where you are an ongoing concern faster. But do not be turned off because you think, wow, what I'm doing is really hard and it's going to take me a bunch of years to figure it out.
Gotcha. So Francis, who's in the session, just mentioned, is there a preference for companies still in private beta versus after a public launch, or the reverse of that?
No preference. I mean, if you've successfully publicly launched a product, that's a huge indicator of a team that can execute, and it's much easier to get your hands around the metrics of the business to understand what's really going on. So absolutely not. And the same goes. So the same goes for. There's a preconceived notion that if I've already raised money, I'm not a fit for an accelerator, or if I'm an experienced entrepreneur, I'm not a fit for an accelerator, and those things are both not true. I was on my third company when I joined Techstars in 2007. And there's lots of cases where companies have already raised, seed rounds or even small A rounds that have come through the accelerator. So.
Gotcha. On that note, maybe to illustrate the range to people of company situations when they're going through, guys, can you give an example of a company you considered the very furthest along and everything they had in place in terms of users versus someone who was very, very small, but it still worked for them to be through the program?
Sure. I mean, one example that comes to mind is Orbotics, the company that makes Sphero. That company originally went through the Techstars Boulder accelerator, and then when we launched our Disney Media Accelerator in LA, they went through that accelerator 2 years later. So they had already been in market with one product. They had another in development. They had raised 2 rounds of funding, and the value of getting access to the media network and the Disney mentors and sort of really expanding their network and professional ecosystem in a domain that was relevant to them was a huge value add. And then, the opposite, even Filterbox, my company would be a great example where Filterbox was a social media monitoring, analytics, and engagement platform similar to TweetDeck or some of the other, Hootsuite or some of the tools that are out like that now. But we were processing the entire social web in real time, and it was going to take us years to build up a backend that met all of my functional requirements. And we had written a prototype UI with a static database. There was no live processing code when we applied for Techstars. We were very early. Uh, and while we were writing code in the background, what we focused on in the program was the value prop, the target market, figuring out what product market fit really meant. We were working on pricing. We were working on user experience, how much functionality to build, front end versus back end, feedback on the competitive landscape, introductions to early customers. There was a lot we were able to do around customer development while we were chipping away at what I used to describe as an iceberg app, right? Only this much of it is visible above the waterline, but there's actually a huge mass that's invisible. And I think a lot of the heavy technology SaaS applications are like that. Or you might see a mobile app that on the surface seems like it does two things, but there's lots of heavy lifting underneath. And even if that's the case, it's absolutely worth it. So, as an entrepreneur, we all, as professionals, we all have a massive opportunity cost to starting businesses. It takes blood, sweat, tears, money, and you're giving up all the other potential things you could be doing. So one of the things I always keep in mind is, wouldn't you rather know if you're onto the next great idea or the next market disruption sooner rather than later? There's really nothing. It's harder than watching someone put everything they have into a business for 3 years, only to realize that it was the wrong strategy. And it's just part of the business. It's just part of startups. It's the beauty of the journey, but it all comes at a massive opportunity cost. And so accelerators, I think, are a phenomenal way to shorten that cycle and to figure out whether you're doing the right things at the right time in the right order or not, because the opportunity cost is huge.
Gotcha. Everyone in the room, please feel free to keep throwing questions in. I'll go to some more that we've been emailed in. I like this one. If you had 2 years to prep for Techstars, what would you start doing today?
That is a great question. I love that one too. If you had 2 years to prep for Techstars, wow, that's interesting. Let's see. So first and foremost, I would probably start by really doing some soul searching and figuring out what market and what problem you wanted to solve. One of the things that I've realized over the course of my career has been, you want to wake up every day passionate about what you're doing, because you're going to have good days and you're going to have really bad days. And through the good and the bad, you've got to love the mission. You've got to love what you're doing. And so if you're going to commit yourself in your life, your professional life at least, to this work and this company for the long haul, make sure it's a problem you really want to solve and something that you really want to work on. And when you get there, I think finding people that you want to work with is really important. I know how hard it can be to find a co-founder sometimes, and entrepreneurs that just go for it and then work on finding a co-founder later, that's great. But if you have 2 years to prep, find the thing that is going to be a disruptive idea that could someday be $1 billion company if everything goes right, and find people you really want to work with and surround yourself with the right people. And then prior to applying to Techstars, set yourself up so that you can have a story that demonstrates consistent and material progress. So, 2 years is almost too long. If you are getting ready to apply to Techstars for 2 years, I might look at the application and go, why did it take 2 years to get to this point? If that point doesn't prove product market fit or prove that there's an ability to execute or functioning product I can play with. So pace of execution and the ability to get things done in a reasonable amount of time for the business makes sense. Again, if you're building something that has tons of back end, start building it ahead of time so that 6 or 9 months before you apply to Techstars, you start proving out product market fit or getting early beta feedback to say, hey, this thing really works.
Awesome. Francisco in the room just asked, are companies with a market and concept for a region other than the USA, say Latin America, still considered? Are there mentors with knowledge specific to other regions? Independent of this, is the know-how applicable internationally?
Yeah, so the answer is, Francisco, absolutely. And I think the best places to apply for those programs are our London and now Berlin program, but New York is another good one for that as well. And we have companies that are focused on credit. There's one company that's focused on credit facilities for for Spain and Portugal and markets over there that are really dealing with the nuance of the way that the banking industry works there. And in the UK, obviously, there's different laws, commerce laws, and ways of doing business. We also invest in Canadian companies. And in terms of the mentors, when you're in those markets, you get more mentors that operate internationally and operate in markets that you're probably working in. So I think our London, if you're an international business or you're focused on things like Latin America, any of our programs can be great, but I think that we can work with you to figure out exactly what business you're focused on and line you up with the right mentors. A lot of our mentors have either run public companies or have worked for companies that are in multiple markets, so there is a lot of knowledge and operating experience in more than just the domestic market.
Gotcha. It sounds like you hit a bit of the next question too, but I mean, other than domain expertise in the different cities, are there actually any differences between the programs in different cities in terms of?
All of the programs follow the same formula. It's largely a 3-month accelerator. It's a mentor-led program. There's sort of 3 phases to the program. So those are all the same. The only difference in terms of the location is there is sometimes a little bit of nuance in terms of the types of mentors or the resources that city has. Boston has more bioscience. We run our Kaplan Accelerator in New York, so stronger with ed tech. New York is obviously great with media and fashion. Our Austin and San Antonio programs are great with infrastructure, but do have lots of mentors that are both B2B and B2C. Boulder is very diverse. So is Chicago. So there's a lot of similarities, but as you get to know the managing directors or look at the other companies that have come through the various cities, you can see sometimes there's a little bit more concentration in certain verticals in some markets. But one of the things that we do with our application cycle is we ask you what your first and your second or third choice is, and all of the managing directors that are looking at companies for their cohort look and see, and that's part of getting into Techstars is does it make sense? Do we feel like we can add value to the mentors in this particular market or ecosystem, have the right expertise to truly help you? So I think you guys have all heard about our equity-backed guarantee, and we really believe in the value of our platform, and we want to make sure that you get tons and tons of value out of going through the accelerator. So it's very important to us that we do matching on our end as well.
Yeah, I mean, on that note, actually, we have a couple other questions related to equity and things like that. Can you maybe walk everyone through, what is Techstars getting from the companies entering in terms of what they can expect in terms of equity agreements?
Yeah. So this is all well documented on the website, but it's Techstars takes 6% equity in the company. We sit at 6% common, so we sort of like to talk about it as though we're alongside you as a founder. And honestly, the right way to think about it, and this is me as an entrepreneur speaking, this is not me as representing Techstars as the brand, but as an entrepreneur, try not to think about it as I'm giving up 6% for $18,000 and therefore my company is worth X, or I'm getting 118K and I'm giving up 6% and being valued at whatever. The $100,000 convertible note is meant to give the company a little bit of breathing room while you're going through a program if you haven't raised yet. The 18K is largely symbolic because there needs to be a transaction. But the value that you're gaining is the mentorship, the relationships, and being part of the Techstars network for life. We have 1,500 mentors, almost 500-600 companies, hundreds and hundreds of investors and co-investors, and we're a worldwide and growing organization. And so great entrepreneurs never start just one business and retire, right? We're interested in what you do next and what you do as a person, not just the current business or idea that you're executing on today. And so really, like the way I justified it when I was going through Techstars in '07 was I looked at what a PR firm would have wanted me to give them in terms of equity if they worked with me for 2 years because I didn't have cash, and what I would have had to give to my strategic advisory board to get the equivalent attention from mentors. And you hire 3 strategic advisors, you give them a point each for 1 year of service, you give a PR firm 2 points for giving you the equivalent of $2,500 a month, you hire an outside design firm, and pretty soon you've given up 10% of the company, and all you've gotten out of them is about 50% of what those people are actually capable of. So from a mental math standpoint, I looked at it that way and said 6% to be part of this platform and get all of that value for forever in perpetuity is a no-brainer.
Awesome. For the most recent classes, what markets and sectors are you seeing more and more of in terms of Techstars being interested in?
I'd love to tell you that we are only interested in X or Y, or that if it's not, it doesn't. If your app doesn't have a viral coefficient of 1.0, don't apply. And it's just not true. We have companies that are in mobile healthcare, that are hardware, software, IoT, that are B2B SaaS, that are infrastructure, plumbing. We have companies that are in the shipping and freight optimization infrastructure. There's a company that just came out of our London program that has figured out how to hack commercial knitting machines to allow people to do small production runs in the fashion industry. So it's really about great teams playing in big industries, applying technology to disrupt the status quo. So if you're a blockchain or banking infrastructure or a payments platform, if you're a medical device business, if you're B2B SaaS, if you're the next SendGrid or Twilio or want to provide an API to change the world, like, we're interested in all of it.
Awesome. What are the most common mistakes you're seeing from entrepreneurs that should, on paper, definitely be able to get in? It's a great idea, great team, but it was something in their application or how they presented it that just didn't gel.
It's a great question. I don't think there's any one answer there. But given the number of applications that we see and how extensive our filtering is, we're pretty good at reading the tea leaves or reading between the lines. So, the traction, the execution, the product progress, it all has to be authentic. And so, sometimes it's not that. Sometimes a company doesn't get in not because they've done anything wrong, just because of the level of competition or the perception amongst the selection committee that we think this company is more coachable or can be helped a little bit more, or our mentors are a perfect fit for this one. Or sometimes it could just be intellectual interest in the problem space that someone's in, right? If you've got a deck of aces and you're trying to decide which one to play, there might be strategic reasons that you play one or another while all of them score the same in that hand, right? So it's hard to say that there's one reason or another. I would say authenticity and validity are important, but then also realize that the competition level is just incredibly high. So the way that you break out, again, is demonstrable traction, de-risking aspects of the business, and proving that the company is adept and can take input from customers, from the market, and adapt to that change and move quickly.
Cool. Vitali, I apologize if I'm mispronouncing the name. Is detailed business action plan and revenue projections required during the application process?
Is it required? No, there's nowhere to upload your 3-year or 5-year pro forma. I haven't seen anyone write a formal business plan in years. No one does that anymore. I think the key is to convey to us that you have fully thought out the business. We understand that anything past 18 months is fuzzy. But if you have no idea how you're going to make money and no idea how much money you're going to need to spend to run the business, and all you're focused on is the functionality of your mobile app, then the red flag would be this could be really cool technology, but we have no idea if this is a company or a business. So detailed business plan, no. High level revenue or expense projections, or working through a business model so that you can walk us through how you're going to make money, yes.
Gotcha. A couple people had sent in some questions. They might be a little bit confused about convertible debt, but maybe you could walk some people through this. If the idea fails, how will the founders repay the convertible debt? Is it different from the simple agreement for future equity some other accelerators have? And what are the typical durations what are the typical duration and coupon of the Techstars convertible debt, if that makes sense?
Great question. So go back to the first question. That was really about how does specifically the question was around the Star Power convertible note that we provide.
If the idea fails, how will the founders repay the convertible debt? And then he was curious if that's different from the simple agreement for future equity.
No, it's very market. And in terms of the convertible note, if a company fails and shuts down, then we write off the debt. We don't take over assets, and the entrepreneurs don't have to pay the company back in most cases if it fails. It's part of doing business. So it's no different than if you took a $100K convertible note from an angel investor. Obviously, the angel investor is there to convert to equity to have a chunk in a growing and profitable company. Perhaps if they are your sole or major investor and there's technology assets or IP to be sold, that angel might say, hey, I'm your preferred shareholder, so I get the assets. But the Star Power note is an unmanaged fund made up largely of early stage VCs and investors, and that's not something that we pursue.
Gotcha.
Yeah.
Stephanie just wrote in, you touched on this a little bit, but what if you've already been through an accelerator before? You mentioned that some companies have gone through them a number of times, right?
Yeah, that's great. I mean, I think if you've been through an accelerator before, there's absolutely not an automatic no. In fact, that's an extra reason for us to lean in, because the company's already been coached and probably is making some good progress or learned a lot. There was another question about pre-seed.
Mm-hmm. Yeah, what recommendations do you have for a startup applying the pre-seed stage, especially taking into consideration they're competing against companies with significant revenue? So basically people trying to disrupt models from very validated large companies already.
We think that's great. This is my own personal opinion, but how much money you've raised is not the leading indicator of success. I think the tech press and just the tech ecosystem puts too much weight on this company's raised a lot, so therefore they're wildly successful. It's validation that they've got some traction or are doing something interesting, but since the beginning of time, the company with no resources and no money has gone up against the biggest Doge player and been able to disrupt. So if you're pre-seed and you've got something that is interesting and disruptive, and you're thinking differently about a market, absolutely we want to look at that. In fact, that's why we provide the 100K convertible note facility as an option, which is a lot of companies haven't raised real rounds prior to going through the accelerator. The accelerator helps them accelerate the business, solidify the strategy, put together a pitch and a vision that really makes sense, and then go out and raise money after the accelerator.
Awesome. One of the interesting things is, so many of the people in the Codementor community are so product oriented that very few of them have actually ever had, formal advisors working with them on their project. So can you maybe walk us through, what once the session, a class has started, a new class of Techstars has been accepted, what do you typically do in terms of your mentorship with an entrepreneur?
Sure. So one thing I would encourage everyone to go check out is the Techstars Mentor Manifesto. and it's been published online. And Brad Feld blogs about parts of it a lot. Um, and I'm looking for it now. I'll post the link in. Um, here's the Mentor Manifesto. All right, it's on David Cohen's blog. I'm posting it here in the chat. I would encourage everyone to read this. This is in the public domain, and this is truthfully exactly what we talk to our mentors about. So this is what we expect all of our mentors to provide to you as an entrepreneur. And what it looks like is, not me telling you, Mark, hey, I'm smarter than you. You're doing it wrong. Do it my way. And you're supposed to decide whether you want to, give me the middle finger or do exactly as I say. That's absolutely not how it works. Brad Feld has a saying, it's just data. And so you might get input from a bunch of different sources. And all of those sources, your job as the entrepreneur is to understand, well, this person's background is this, or this person's experience is that, and that's probably why they look at the world through the lens they do, and that's why they're giving me this feedback, and that's what they see. If you get feedback that resonates with you and you hear ideas consistently that are different from what you're doing, it's your job to parse that and decide what you want to do with it. So that's how it works, right? If you tell me that you're building a mobile, social, local coupon app, I might say, that's awesome. There's a lot of them in the market. How are you going to differentiate? And if you tell me the way you're going to differentiate is by offering bigger discounts, I might say, have you validated that that's really going to set yourself apart? And is that going to make sense from a customer acquisition and unit economic standpoint if your margins are worse than the other products that are out there? So I'm giving you things to think about. I'm giving you, challenge points to go noodle on to help you think through your business. If someone says, I have no idea how to think about that, then maybe we break it down and there's more of an educational process that goes on. But it's not draconian and not dictatorial.
Awesome. I really like this question. Someone emailed in. This is so Codementor. A lot of the people, especially more on the product side of this world, have been contributing to the open source community for a long time. They're putting up projects on GitHub daily. Some of these people have projects that are being used by thousands of people every day, but there's no business model.
Yep.
Is that a good type of situation for someone to apply to an accelerator where they're not sure how to think about pricing or ever put anything that they would charge for around a product, but they have something that tons of people love to use?
So the fact that you're on GitHub, the fact that you can ship code that people use and you know how to deliver a product that works are all awesome things to help you fill out a compelling application. There has to be at least a stake in the ground around a potential business model or a way to leverage what you're currently doing in the open source community and turn it into a business. You can take the Red Hat model and say, I'm going to build an enterprise version. You can take I'm totally drawing a blank on the company that built up Cloudera that built up a big business around Hadoop, which is open source, right? So there's lots of ways for us to help you create commercial success leveraging open source work, but the application has to have at least some concrete thinking about the ways to monetize it or what the vision is for taking this thing that clearly has product market fit and turning it into a business.
Right?
If your application says, I'm super successful in the open source community, everyone loves me, I have 5 stars on this, that, and the other site, take me in to your program and help me figure out what to do next, that's probably not enough for us to go, oh, this makes tons of sense. We want to know that the entrepreneur has enough business acumen in addition to coding skills to understand where the value is and how to turn that into a business.
Gotcha. A lot of the teams that we hear about kind of coming together for accelerators like this they're either completely product focused or maybe they're split product and business and operations. But one of the pieces that we rarely hear about from the founding team is marketing. Have you seen that as being important to have in the founding team, or is that something sort of always kind of thrown together later as the product and the business plan is developed?
I mean, I'm a marketing guy, so I'm biased, but marketing and go to market and customer acquisition is super important. Super important. Does it have to be on the founding team? I don't know that that's true. Like, we're not going to not let someone in because they don't have a CMO on the team.
Mm-hmm.
But if you've got 3 engineers and none of them are business or product oriented people, they're just, everyone loves to develop and code and everyone's super geeky and nobody understands or wants to talk to customers and wants to market and evangelize, and no one puts their hand up and says, I'm going to run the social media accounts. Eventually what happens is you've got a bunch of technology and you don't really understand the market, or you have no way to prove that you have product market fit because no one wants to do the selling. So at some point you need somebody to really own that. Customer acquisition, branding, marketing, all of it is important, unless you're building developer tools and your entire marketing is, pushing your GitHub link.
Makes sense. Well, guys, I have my last couple questions that I had prepared, so please feel free to throw in any more because we still have some time left. But one other question that we heard from a few people about, where did I put it? Sorry. Oh yeah, was the alumni network. So I know that's a big benefit is utilizing the many companies that have gone through Techstars. How have companies that have grown far past their days in Techstars stayed a part of what you guys are doing and helping people coming in now?
Sure. I think probably some of the best examples are companies like DigitalOcean and SendGrid, who are Techstars alumni, who the founders of those companies are active mentors, they're active investors, and they offer almost every Techstars company offers the rest of the network perks at significant discounts. So things like hosting credits, free services, discounted SaaS products, you name it. There's tons and tons of perks that are exclusive to the Techstars network. DigitalOcean and SendGrid have been incredibly generous, and now both of them are actually global sponsors of Techstars as well. So they've gone from from program participant to major perk offer to global sponsor, and so they stay involved at multiple levels.
Well, yeah, that was really all the questions that I had and that had been emailed in. Again, if anyone has any last questions for Ari, now's the time. But Ari, I know we're probably like a week or so away from the next deadline. Is that right? So people should probably hurry up and get their stuff in.
Yeah, and I would say it's funny. I work with an entrepreneur who is incredibly literal. And she happens to look at everything in sort of a very verbatim, literal way. And I was helping her with her Techstars application the other day. Get it in early, get on our radar. Even if it's not perfect, if your video isn't where you want it to be, you can always update us. It's better to get something in that is the best that you have today than to not apply until the very last minute.
Makes sense. Awesome. Well, Ari, thank you so much for your time. Thank you guys for all viewing in. Also, we talked a little bit about David Cohen. We're going to be doing an office hour session with David next month, so definitely check out the Codementor site. We'll be talking to him more about angel investing and things like that. But hopefully everybody got some benefit out of this, and hopefully some of you will be applying to the upcoming Techstars. Ari, where should people follow you and check out what you're up to some more?
Sure. Probably the best place is on Twitter. I'm just at Ari Newman, or my blog, arinewman.com.
Awesome. Well, guys, if you need to revisit any of this information, this is going to be on the Codementor YouTube channel as soon as we stop, so feel free to check that out. And with that, I'll say good afternoon, good morning, good evening, wherever you are in the world. Thank you guys so much.
All right. Thanks for having me. Take care.
Awesome.